As part of raising more than $4 million of funding, I negotiated with more than 100 investors. One crucial thing I realized, it's not just about the valuation, it's about the terms you want to raise at and the partner you want to have on board. In this episode, I will outline the 10 negotiation strategies I used, which helped me to raise capital on really favorable terms. Intro. What's up everybody? Welcome to my channel. I'm Alexej and I help founders scale. The topic of founder-investor negotiations is one of the most critical topics which can break or make your startup. Giving away too much equity or giving away equity on bad terms might hunt you for the whole duration of the startup. Prior to launching and raising for my own business, I have been a VC investor at a large family office, and I've also worked in private equity and sat on boards. I saw the investor-founder negotiations from both an investor perspective as well as from a founder perspective. If you're new to this channel, welcome. I drop an episode once a week with insights from companies we work with, venture-backed, private equity-owned, or bootstrap businesses all around the world. In this episode, I'm going to share with you the 10 negotiation strategies which helped me in my 3 equity funding rounds and also with negotiations regarding debt facilities with investors and our house bank. If you're excited to dive into the first strategy, go ahead and press that like button for the YouTube algorithm. Now, the first strategy, transforming competitive negotiations into collaborative ones. The norm in negotiations often leans towards competition, with the majority aiming to win at the other's expense. In fact, 90% of negotiations are competitive. Shifting your mindset towards collaboration changes the game entirely. It's about seeing the negotiation as a joint venture where both parties can achieve their goals. Not at each other's cost, but through mutual benefit. This requires balancing assertiveness with openness, aiming for an agreement that are advantageous for everyone involved. Let's look at an example. Imagine a scenario where a startup is negotiating with a potential investor and the main issue is the high valuation of the startup in a priced equity round. The investor is hesitant, concerned about the ability to get the returns given the high entry valuation. Instead of pushing harder, the startup proposes a convertible note that if the startup does not raise its round at a higher valuation in 18 months' time, the convertible note converts at a much lower valuation than the one currently being discussed. And if the startup raises at a much higher valuation in the future, the convertible note investor gets a 20% discount on that valuation. That addresses the investor's concern while also securing needed capital for the startup. Adopting a collaborative approach doesn't mean abandoning your goals or compromising your position. It's about creatively finding ways to meet the essential needs for both parties. This often involves thinking outside the traditional negotiation box to propose solutions that might not have been considered otherwise, turning potential conflicts into opportunities for partnership and growth. The second negotiation strategy is preparing to win. The foundation of successful negotiations go beyond financial knowledge or a polished pitch. It's about comprehensive understanding of your startup's value proposition, market position, and competitive edge, coupled with insight in potential investors' motivations and concerns. A famous quote is, "Success depends upon previous preparation, and without such preparation, there is sure to be failure." Being prepared for investor pushback with data-driven responses showcases the founder's thoroughness and builds confidence in the startup's ability to overcome challenges, further strengthening the negotiation position. Now, in position number 3, it's beyond money. Understand the counterparties' needs. Successful negotiation hinges on recognizing that each party enters with distinct, often unspoken needs. Identifying these needs goes beyond the explicit terms discussed, tapping into the strategic desires and concerns that motivate each side. As an example, an investor request for a larger equity share might actually stem from a desire for minimum ownership percentage based on the requirements from their own fund investors, the LPs, or just to have more visibility. Conversely, a startup's pursuit of funding isn't solely about the capital. It's also about finding a partner who believes in their vision and can contribute to their growth beyond just financial support. So how can we apply that? Well, founders can bridge the gap between surface requests and underlying needs by proposing to give a board seat with less ownership than normally, or regular strategic review sessions, or other means to provide more transparency to the investors or satisfy certain criteria the investor has. For startups, emphasizing how an investor expertise and network align with their growth strategy can demonstrate the value of the partnership beyond the monetary investment. The most important thing in communication is hearing what isn't said. That's a quote from Peter Drucker. And that quote underscores the importance of looking beyond surface level demands to understand the underlying needs in negotiations, emphasizing that the true understanding comes from attentive listening and empathy. Now, if you learned something from that video already, and if you are watching this, and chances you have, which is amazing, please leave a comment on how you liked the video so far. On position 4, leading the negotiations through listening and empathy. Effective negotiation leadership is rooted in empathetic listening and understanding. It's about fully engaging with the other party's verbal and non-verbal communication, grasping not just the words, but the intentions and emotions they convey. This approach fosters a negotiation environment that prioritizes mutual understanding over mere victory. Now, let's consider negotiations with an investor who is skeptical about entering a saturated market. Instead of immediately countering with aggressive market share strategies, a founder first acknowledges the investor's concern, showing genuine understanding. Then, the founder shares a detailed plan on how the product uniquely addresses unmet needs within that crowded market, the blue oceans within the red ocean. That illustrates a thoughtful consideration of the investor's apprehensions. Ernest Hemingway said once, "When people talk, listen completely. Most people never listen." And an additional point, leading with empathy and listening doesn't dilute your negotiation proposition. Now, the fifth strategy is to ask good questions and drafting solutions together. The essence of impactful negotiations lies in the questions posed. Thorough research into investors' backgrounds and motivations equips entrepreneurs to frame their presentations and queries in a way that resonates deeply. Let's go into an example. Imagine you engage with an investor known for backing innovative tech solutions. By inquiring about the factors that contributed to the success of their previous investments, you gain insights into their success metrics and the investment philosophy. This knowledge allows you to highlight aspects of your startup that align with these criteria when you pitch, demonstrating not just compatibility, but also commitment to a shared vision of success. This approach is transformative across all negotiation scenarios. Tailoring your questions to uncover what truly matters to the investor can shift the dynamic from adversarial to cooperative. Now, number 6, self-control and managing emotions. The intensity of negotiations demands a high level of self-control. This isn't just about curbing emotions. It's about strategically positioning your startup by thoroughly understanding its market standing and competitive edge. Presenting well-researched data and strategies to investors not only showcases your startup's strength, but also demonstrates a level of preparation and confidence that can significantly influence negotiation outcomes. Let's go into an example. Consider a scenario where a startup founder faces skepticism from a potential investor regarding the scalability of their platform. Now, instead of responding defensively, the founder uses self-control to calmly present market analysis, user growth data, and a clear roadmap for scaling. This approach not only addresses the investor's concern, but also highlights the founder's confidence in the business model and the ability to execute. Now, we covered 6 strategies already. Let's jump into the 7th. Be prepared to walk away. A fundamental principle in negotiation is knowing when to walk away. This isn't about giving up easily, but about recognizing when a deal doesn't serve your startup's best interests or align with your long-term goals. Being prepared to walk away empowers you to negotiate from a position of strength, ensuring you didn't compromise your startup's values or future short-term gains. An example is when you negotiate with an investor who insists on terms that could limit your control over company decisions. Despite the allure of that investment, you assess the long-term implications of such terms and you decide to decline. This decision, though difficult, preserves your autonomy and opens the door to future opportunities that better match your vision. A famous quote is, "Sometimes you have to walk away from negotiation, but that doesn't mean the door is closed forever. It just means that now is not the right time." Can I please get a yes in the comments? The 8th strategy is to anticipate curveballs. In negotiations, especially with venture capitalists, it's crucial to anticipate unexpected challenges or curveballs, because they negotiate all the time and you don't. These can often come in the form of surprisingly low valuations or terms that don't align with preliminary discussions you had with them. Now, An example, a startup founder, after a series of positive meetings with the VC, receives an offer with a valuation significantly lower than anticipated. Despite the friendly rapport established, the founder recognizes this lowball curveball as a common negotiation tactic, not a reflection of the startup's worth or the potential partnership's quality. Now, when faced with a curveball like that, it's essential to respond with a composure and strategic consideration. For instance, upon receiving a lower than expected offer, you might say, "We appreciate the offer and the positive discussions we've had. However, the proposed valuation doesn't align with our understanding of the market or our startup's potential. We're keen to find a middle ground that reflects the value we bring and the shared success we envision." On position number 9, know your value. Understanding your startup's value proposition and unique selling point is crucial before entering any negotiation. This means having a clear grasp of the problem your startup solves, the size of the market, your growth rate, and your competitive advantage. Equally, know your startup's valuation, a reflection of its worth based on factors like revenue, traction, and of course, your competitors' valuation and their funding rounds. Being well versed in those areas not only prepares you to answer VC's questions confidently, but also positions you to negotiate more effectively. Now, Warren Buffett always says, price is what you pay, value is what you get, and that goes both ways. Now, knowing your value also means being prepared for VCs to have a different valuation method and expectation than your one. It's important to remain realistic and flexible, ready to negotiate not just on the basis of the calculated valuation, but also considering the perspectives and the valuation approach of the investors you negotiate with. Now, before I cover my last point, please hit that like button. Now, last but not least, on position 10, visualize the outcome. The ability to visualize scenarios and anticipate potential outcomes is a distinctive human trait that plays a crucial role in your negotiations. Embrace the concept of assiduity, as highlighted by billionaire investor Charlie Munger. This practice of visualization not only prepares you for the various negotiation turns, but also helps in formulating a more robust approach to achieve desired outcomes. In the swimming world, the Olympic athlete Michael Phelps visualized every detail of his race, from the starting block to the finish line. Entrepreneurs can benefit from visualizing the negotiation process in a similar way. This includes imagining the initial pitch, the exchange of questions and answers, potential objections from VCs, and the moment of agreement. Such detailed visualization will help you a lot. Now, to recap, before I give you a bonus tip, the 10 strategies to succeed in your negotiations. Number 1, transforming competitive negotiations into collaborative ones. Number 2, preparing to win, the foundation of successful negotiations. Number 3, beyond money, understanding the counterpart's needs. Number 4, leading the negotiations through listening and empathy. Number 5, asking good questions and drafting solutions together. Number 6, self-control and managing emotions. Number 7, be prepared to walk away. Number 8, anticipate curveballs. Number 9, know your value. And finally, visualizing the outcome. Now, here is the bonus tip, and that will give you a really good jump into the relationship with your investors. Maintain open lines of communication after you raise the funding. Provide regular investor updates and show gratitude for their time and effort will foster a much more positive and long-term relationship. This ongoing engagement is crucial for the sustained support and success of your startup. Successful negotiation is not about getting to yes, it's about mastering no and understanding what the path to an agreement is. Christopher Voss, the author of one of my favorite books called Never Split the Difference. I drop an episode like this with strategies and concepts for your tech business once a week. Please hit that subscribe button and that bell icon so you get notified every single time I release an episode. If you have a fellow founder, if you have a team member, if you're part of a Slack group, Telegram, or WhatsApp group with other founders that could get value from this video, please share this with them. I want to help as many founders as possible to scale their business. Thank you for joining me on this journey. I'm Alexej and I will see you in the next episode.